it's like somebody getting into the Indian team?
I think I've spent now about 5 months in the course, and I think these 5 months clearly indicates that I'm going to meet my objective of upgrading my knowledge on modern management theory.
And what I did.
Hi, good evening all of you. What we're going to do today is that we are looking at doing a couple of things today. One is we want to do a case on Starbucks, and that is typically going to be talking about value chain analysis. We will talk about competitive advantage to a little more deeper extent. And then of course we would actually go on to really do something on location. So we might actually do half a session on location today and then half a session in the next Sunday session. So that is how we will actually move ahead. Before I actually go ahead, in fact, for the sake of the class, what I'm going to do is that I'm going to give you a quick round of ideas on differentiation and lips and hips. That is going to happen towards the end of the session. I'll not spend more than 10 minutes, though it would be repetitive for a few of you, but I would still want that session to be actually done for the sake of others. Like, in fact, I've got responses. In fact, we have something like 9 people today for the session. So 4 of us have actually heard the session before on low involvement products and high involvement products, and 5 of them have not really gone through this. So I'll do a very quick round of building up the idea on lips and hips, and that's how it is going to be, because that's a very important thing that we want to do on products, services, and so on and so forth. So this is what it is, but what we'll do today is, like, we'll start with a case on Starbucks. So my first question would be, what do you think is this case all about? Like, what is the decision that we have to take here? Who's going to start here? Yes, Suresh. What do you think is this case all about?
Sorry. Yeah. The case basically highlights how what was the market condition in terms of the concept of specialty coffee between the 80s, 60s to 80s, and then how Starbucks came up with the idea of specialty coffee, and then it talks about the various the competition that evolved, and how Starbucks evolved, and what was their business system, how did their business system evolve as and when the competition emerged, and how the market became saturated. Mm-hmm. It also basically how the regulations also changed. I mean, the suppliers. It also talks about suppliers, consumers, competition. So what were the challenges the suppliers faced? So the dealing directly with the farmers was not the instead of dealing directly with these farmers, they dealt directly with the exporters. And what was the consumption pattern of coffee in the United States? And what was the reasons for the dip in the consumption when it was 2 to 3 cups per person per day, to how did it reduce and 1.7 cups? So, and how did the popularity gain back again? So what were the reasons, or the branding, how the branding was done to get more consumers or to increase the consumption pattern?
Mm-hmm. Okay, so these are a few base level points, like this is what was actually happening in the market. But if I ask you a further question, and that is, what is the decision that we have to take here today? So if you really look at the last page of the case, the last text page of the case, like he's trying to say something to you. What is the decision that we are really looking at taking? Page 21. So what is the decision that we are supposed to take, Suresh?
It's probably, I mean, it's again related to the value chain, and I mean, how critical it is important to understand the entire value chain and creating a strategy to gain the market share.
So you're talking about strategy to gain market share. So we have to strategize for this,
and to have a basically a competitive to have a competitive advantage.
Okay, have a competitive
relating to market share.
Okay, so what you're saying is, how do I actually maintain this market share, right? What is it that the company should do to actually gain market share? Yes?
Yeah.
Okay. Anything else that we are supposed to decide in this case? Okay, I'll leave you, Suresh, here. I'll get back to you. I'll get back to you.
Yeah.
Sure.
Okay.
Okay. Thanks. Okay, so we have two people who've raised their hands. Pratabi Raman.
Hello.
Yeah. You there?
Yeah, great. I think the most important question is possibly to answer the question like what are the given the options of growth for Starbucks, which would be the better option? Probably that is a key question to be decided. Second, in the quest of growing, I think they have done too many things at a time. So these too many things resulting into too many options for the organization, both within the US continent and moving into different paradigms altogether, rather getting into different zones of operation, and of course getting into formats like specialty coffees and getting into international markets, things alike. So the point is, in the quest of getting so many options, has it done the right thing to endorse all of them? Should it be focusing on some of them and eliminate some of them? Should it be doing a integration kind of some sort of an integration within the organization with its suppliers per se? So I think those are key differentiation, which if answered, I guess the case would look at least to an extent answerable, I guess. So given the options, I think that would be key. We cannot be, there's not much being talked about the having coffee being pretty commodity oriented. I think the pricing factor could also be leveraged, and formats like newer formats like blends or the flavored coffee could come into being, which has not been tapped per se. Ready to drink kind of a concept which was available, which was growing per se, has not been tapped in a decent way, I feel. And possibly look at growth in terms of acquiring some sort of an acquisition could happen in terms of its growth strategy. Obviously all these things relating into some sort of an activity designed to increase the per capita consumption. Probably some sort of an activity to increase such a per capita consumption could also be talked about. I think they have not been answered. Of course, this being commodity, one will have to be, one cannot challenge the regulatory environment, economical, basically the regulatory and the political environment in the country. So I think one cannot be challenging that. Keeping that constant, I guess the growths will have to be determined. So that is my understanding. But of course, there's a lot more to do if the TG has been well defined. Perhaps the TG has been well defined. It is more of urban phenomenon. It is more of a college. It is more of the average age is about 30 to 59. Could they be given a much better experience could they be actually invited, and any experience which they could gain out of the Starbucks the shop, the actual consumers experience could have been enhanced. Perhaps some sort of an activity to draw in more crowd. Probably something to do with, if the learning has been great, mostly in terms of telling that the knowledge of coffee is very great, and it could also replace alcohol. So probably some sort of an campaign against the alcohol could also be done. Just a thought. I don't know whether it will work or no. But
so let's take this ahead. So you're saying we have to really decide on options and everything. How would you do this analysis? That is the biggest question I have here today. What are the steps that you would really take to come to a decision? Now it's a process, right? Strategy formulation is a process. So we have to really understand this process.
True.
What is it that we would actually do here? So tell me the steps.
First per se could be competition per se. I think competition itself. I think we could go with market forces, with suppliers and things like. I'm not sure that I'm going the right way, but I thought that is the right way.
Okay. Anything else?
The product per se has not been harnessed, in the sense that specialty coffee, which was growing at, probably if you look at it was growing at about 25% of the specialty coffee was flavored. Probably some sort of a study on that could reveal that the potential of getting into such a flavored coffee concept could be right.
Okay, now you're actually going into the.
I just might be.
No, what you're saying is, like, what are the next steps for really taking a decision, right? What are the other sets of information that you would probably require to take a decision? But let's try to understand the steps first. What is it? The first thing that you will try to understand is market forces. That's what you're saying. Yes? Anything else that you would actually do?
True.
Once you've understood market forces, do you think you'll be able to take a decision, or you need some more information? Or you'll have to do some other analysis?
I think I should. Maybe some other analysis. I'm sure that is not that will be only the basic of market forces. Will only give me the idea of where we are. What is the status quo per se? What are the strengths and weaknesses? More on those angles.
Okay. What else would you have to know?
Second could be possibly the consumption patterns, the demography per se.
Okay, so you'll try to understand the customer a little better, right?
Customer profile, yeah, that is
okay,
it.
So you're talking about consumption, etc. Anything else? Okay, let me make this question a little more complicated.
I think it will. Okay.
Steps plus frameworks. What would you use? Okay, now I must actually help you here. We will not use 5 forces here.
Okay.
So what do you think we'll do? You have to go through this process of analysis, right? So how would you analyze the situation? Now you are Howard Schultz here. What do you, and say you are the new CEO here. What do you think you will do? How would you actually come to a decision of whatever? Because I think the biggest decision is like whether they should actually go ahead with the McDonald's or not, whether they should actually get into other sets of segments or not, and so on and so forth, right? So if you really want to take this decision, how do you think we will do it? Okay, I'll leave.
But there is also mention. There is also mention of moving across. If it is a growth could be within the geographies where Starbucks operates, or move into newer geographies, which is what could lead into growths.
Okay, so what you're saying is like you go to newer markets, right?
Correct.
Oh, okay. So, but then that's a strategy, right? But you have not done the analysis first. I need the analysis first, because what you're saying is that anybody can say this, right? That okay, now you could do this,
okay.
we could do X, we could do Y. I need a sound basis for saying what you're saying.
Okay, I think I'll have to think a bit more.
Okay, no, not a problem. I'll actually go to the next person. I'll get back to you, Patabi Raman. Yeah.
Fine.
Yes, Amit.
We are supposed to build in from here?
Yeah, please go ahead from here itself.
All right. Okay, great. My first comment is on your first question, that what was the key decision we are supposed to make at the end, or what was the main, I think Starbucks has created a brand image in the US market. So that was that should be the major decision or conclusion once we come to end. And they have understood, they have made the customers realize that quality is the main concern, and what they can offer is something better than their competitors, or whichever companies are there in the coffee industry. So they have created a brand image, and that's what they have used in creating a unique experience or something like that. Now, coming to the second point, I think they do not need to go in liaison or merger with McDonald's or any other company, because they already have established themselves in the US market, and they have created their brand image, and they are generating revenue on consistent basis. Right from starting a small store in 80s, and turning to right now, we can see a consistent growth pattern in their So my point is, they do not need to go for acquisition, but rather they can expand their business in international markets, which they probably have not done much.
I'll stop you here.
Yes.
I think what you're giving me is a solution. I need the process here first. I think we need to get the process right first. I need you to focus on the process today. So today's session is about process of decision making. How do you think you will take a decision here? What are the steps that you would take? And what is the analysis that you'll do? And then how would you actually come to a decision that you're saying? I think like a lot of things could actually happen from the gut. You could actually make a lot of answers. But then the question is, can we actually say that, okay, the data supports us? There is something else that is happening around it. So can you give me a more focused thing in terms of like, what do you think that you would do? The steps of analysis, and then we'll actually go to the analysis. And then we'll try to see whether you're right or you're wrong in terms of your suggestions.
All right. If we talk about their new initiatives they have done, that's probably the Frappuccino, the collaboration with PepsiCo, and which have generated estimated revenue of $1 billion, and the collaboration with Dreyer's ice cream, they have given like $40 million. So these two particular data show that if we invest in any other product, I'll just give an example of they have probably launched in organic products. They are mentioned in their website. So these sort of organic products is environment friendly and is appreciated by both government and customers. So they probably can launch these organic products and any other product because we have seen the success of collaboration with PepsiCo and Dreyer's ice cream, and other collaboration with United Airlines or Barnes and Noble stores and all this stuff. So if it has been success, then they should go ahead and step into collaborating with collaborating with all those organizations which are very close to customers. This is first thing. And second thing is expanding their business into international market. So we have seen their success in United States, and the time where in 80s or 90s when they were not exactly there were not facilities from daily commutation from US to Pacific Rim or India or other countries, but now we have many facilities, and we can certainly focus or target on other markets. So this is the second thing, and I think I have something in my mind.
Yeah, go ahead.
So
please.
If you can put
Yeah, Amit, please.
If you can put, all right. The thing is like they have created unique customer, experience. I think I'll come back to.
We'll come to this later. Let me understand this process a little further. Okay, I'll leave you here, Amit, right now. So yes, Rajiv. Yes, Rajiv. What do you think would be the steps? How do you think you would come to a decision here?
I think what Howard Schultz and his senior management has to think through, or the process that they should take is to think through once again about, what is it that has really made them so successful. Starbucks till now, at the point where this case ends, is a hugely successful story.
Okay.
So they have to, as one of my colleagues said, yes, they have to look at what is happening in the market about competition, etc. But faced with the choices they have faced, they should go down and think through what has made them so successful.
Very good.
Has it been, which, technically we can say, what are the capabilities that have created this hugely successful brand and market success and also financial success. And just look at what are the opportunities in front of them, and they seem to have many because they have a great product, they have built a great customer brand, and they have built a huge amount of expectations based on their past performance about their future performance. So then if they look at their capabilities and they look at the options of future growth that they have, the domestic market, or creating domestic means the North American market, further penetration, or looking at the international market, or taking a great product, because they definitely have developed their expertise in that entire coffee sourcing, vendor relations, roasting, and all that thing. So should they now take this to grocery? Should they use the online? Should they do all this? What will be the return trade-off ratio? Can we do this? Can we do this successfully? Howard Schultz has been, all about creating that theatrical experience for the customer, third place to have coffee. But he has, the case also highlights the great amount of supply chain success, product success, etc. So I think capability analysis.
Great, Rajiv. So what we're saying here
and the
is
return, trade-off. Yeah. I also want to highlight one simple point also. Howard Schultz is a human being like all of us, and when faced with a lot of options, I think he and Oren Smith also need to ask themselves, hey, can we really do all this? Do we have the time to do all this? And if we have limited time like all of us, then shouldn't we pursue that which is, maximum return or maximum most important right now?
So when you're saying time, can I
In
replace
addition,
it with resources?
Yeah. Resources, absolutely right.
Okay.
So do we and I and our company have the resources?
Okay.
Also one conflict which I must also mention is that there is also a question about, and I think there is a lot of pressure in the company about, we have created a brand called Starbucks. Now shouldn't we leverage it and sell CDs and, sell mugs and all those things, t-shirts, etc.
So should we really go ahead
definitely needs a debate. Should we do it? Because it's more about my customers. There's this famous quote of Howard Schultz, we are in the coffee business serving people, or we are in the people's business serving coffee. So if you're in the people business serving coffee, we should definitely serve them with more products. But I think Starbucks and coffee cannot be dissociated. So
yes. I just lost
it would be interesting to hear your.
Okay.
Yeah, what I'm saying is that.
Could you just
I think I've made most of my points.
The last point. I just lost you on the last point. Could you just say that?
Yeah. I think two more questions, or one important question is that while there is a lot of success about creation of a Starbucks brand, The question is now, should we leverage? We are already present in great places. We already have great customer base that comes in. But should we sell CDs, books, T-shirts? Because then my baristas will be, my baristas is all about, talking about coffee, knowing about coffee. Yeah. So I think, that famous quote of Howard Schultz, we're in the coffee business serving people, or we're in the people's business serving coffee.
Okay, now let us take it forward from here. What do you think Starbucks is actually doing from your point of view? What do you think? Why do people come to Starbucks, or why are people coming to the store? What are people buying when they actually come to the Starbucks coffee store, or whatever? What is actually happening? What's your point of view on this?
They're coming to a place which serves great coffee, specialty coffee. So, but they are also coming to a place because of the experience and ambience it gives them. They come to Starbucks maybe to relax, to meet friends, to just spend time alone. So they love the ambience and the experience.
Okay, so you're saying
great coffee and yeah.
So you're saying two things here. Coffee
I would
and
keep
experience.
it at, yeah. That's right.
Could you tell me more about experience? Could you tell me more about coffee? Okay, now I must ask you a question.
More about coffee? Yeah.
When you actually go to a place like Cafe Coffee Day, what is it that you're actually wanting to do there, or why do you go there? Say Cafe Coffee Day, or barista, or mocha, or whatever. What is it that you're really expecting there?
Is it a place to relax with friends?
Okay, so for you it's a place for relaxing.
Yep.
Okay, so it's more about
and having good coffee.
And having good coffee. Okay, can I ask you a question here, Rajiv?
Yep.
What do you mean by having good coffee?
What?
No, I have a point to make here.
Yeah.
When you go into a coffee store, what is it that you like? Is it that coffee smell, or is it that taste of coffee?
Yeah.
What is it?
It's I think everything that has been built around it. It's definitely the look and feel, the smell and taste of coffee.
Can I ask you a question here?
Hype and
do you think coffee has taste?
It definitely has a taste, but it's what you built and how you get, what you associate with that taste, and how therefore you can become an addict. So coffee actually, if it was, its taste appeals different to different people. So therefore there's a lot more to it than its pure taste of coffee. If I just take coffee beans, they're the most horrible thing in the world. So,
okay, well, go ahead. So, okay, let me understand this coffee thing itself. So when you say great cup of coffee, what is it that you're looking at? You're looking at a consistent kind of coffee at all points in time, or you're looking at variety also? There is some variety seeking behavior in you.
This could be personal. So yes, sometimes I may seek variety. But what I'm definitely expecting, and it's also because I'm, going and spending a lot of money, so I'm expecting great service, great staff, very neat and clean, where I'm treated well with friends, where, where spending an hour or hour and a half is a pleasure. That is very important. The day that stops, I won't go to a barista or a cafe coffee day.
So that means you're actually seeking pleasure here rather than something else.
Very well put. Absolutely.
So it's about experience. It's probably not about coffee then. It's about that whole... No, I'm just trying to understand this, like there's something very interesting here, but I must share something with you. When you actually go to a place like Barista or a Cafe Coffee Day or a Starbucks or whatever, very interestingly, they have a great aroma that goes on there. I always want to ask people, what is that aroma all about? Is it that's the real aroma that you're really having? Or is it that's got created there and it actually makes you a compulsive buyer for coffee? Or it just creates something in your head, okay, now let me just have a cup of coffee.
Yeah, I think that aroma has a definite role to play, and I've experienced that in Starbucks also myself.
Very interestingly, I must share this with you. That there is this is a very interesting trade secret. That aroma is not because of the coffee that is actually getting brewed there. It is because of something else. And what is that something else?
That I didn't know. Sorry, it's because of the roasting of the beans and the temperature.
No, it's not about that. It's not about that.
Oh, so what's the trade secret?
It's a perfume.
Okay, a coffee-based perfume.
Absolutely, it's actually about perfume. In fact, one of the companies has recently launched a chocolate perfume. You must have already seen it, Axe. So in fact, if you really look at all these guys, I do not know if you've ever seen these folks, they would actually spray something in the air when you go to their place. And that is actually the aroma that they're really trying to spray. So anyway, so when I say about coffee or whatever, I think this whole company is tilted more towards experience than anything else. But this leads us to a very important question. How does this company create this experience? Is it just about the store or is it something else as well? Because you said something in your previous stance that there is something, what do you call, something on capabilities, right? So this creating this experience is a capability issue. Do we agree on this?
Correct.
So what is it that they are really trying to do to create this experience? And consistently, day in, day out, so that people go there, they love it. Whether they go to one store in New York or they go to a store in San Francisco or they go to a store in London, they probably just have a same kind of a feeling. There is absolutely no difference in the taste of coffee. The experience is the same. So what is it? How are they really doing it?
I would say my answer is they're doing it by having excellence or capabilities in 3 areas.
Okay, Rajiv, in fact, I'll leave you here. In fact, I want this answer from one more person. In fact, Suresh has raised his hand. I'll come back to you with this question itself after about 5 minutes, please. Yes, Suresh.
Yeah, basically, Starbucks, I mean, connecting to what Rajiv said, I think they have been able to kind of do that, they have been able to do that consistently across any Starbucks location or give the same experience to all the customers. Is one thing is they've tried to brand that Starbucks is a place where people can kind of come and meet and get that experience because they may not have the same experience at home or in the office place. So the ambience that they are creating is congenial for such a sect of people. And in terms of how they have been able to deliver the same system across all their locations globally, is in terms of their business system, how they evolved in terms of sourcing, the trainings that they invested. So they identified that if they have to give the same kind of experience across every store, then their methodology they use to deliver that experience has to be consistent, and that's where they've invested in training their baristas in terms of HR management, in terms of marketing. So they have adopted the same set of practices across all their stores. The way how the roasting, blending is done, the supply chain. So all the practices that they have in terms of making sure the end customer gets the same look and feel of the Starbucks experience. They have made sure that the entire chain of activities that happens right from the supplier till the end customer, it adds value at each and every step. So they have clearly mapped the value chain, and they have ensured what are the differentiators, or what is it that Starbucks gives as a difference to its customer in the taste and in the experience from any other say second cup or Diet Rich. So
okay, so what you're saying is
probably not done completely.
Mm-hmm.
Yeah.
So what you're saying is that the value chain of the company gets embedded with the value chain of the customer. Am I saying this correctly?
Yes.
Okay, so
Yes.
this is what you're saying.
Yeah.
So they actually get embedded here.
Yeah.
Incidentally, this is one of the
Yeah.
most important things in strategy, in fact, and that is that the value chain of the company should actually create some kind of a value in the value chain of the customer. If that is not actually happening, then things are really going to fall flat. But coming to this thing, so if you really look at it, there are about 4 or 5 activities that this company does something very, very well. And what are those 4 or 5 activities? So let's try to understand those things. So what about sourcing? You said something on sourcing. Yes, Suresh. Well, what about sourcing?
Yeah. So, sourcing is basically, I mean, the kind of people they get to kind of, the people who get.
Think about it. Like there are about
also comes
2-3 things that they do in sourcing. What is it that they're really trying to do in sourcing? Now, if you do a value chain analysis, you're doing a capability analysis here. Yes?
Yeah.
So what is it they're really trying to
Yeah.
do in sourcing? What differentiates this guy? Because if you really look at it, Starbucks is about creating a differentiation. Starbucks is about creating an experience for its customers here. So if I want to create an experience here, if I want to create a differentiation, then the sum total of activities, as we said the last time, should actually create that differentiation.
Yeah.
So what is it that he's trying to do in each of these steps to create that differentiation?
Okay. In terms of sourcing, Starbucks never compromised on the quality of coffee that they got from their suppliers. I mean, they always went ahead to get the best quality coffee from their suppliers. And at every stage of, I mean, they insisted on ensuring that there is multiple sampling done. So the quality of the raw material they used they ensured that it's always high, which is one of the key differentiators, I think. I mean, they would not make any compromise because that's one of the key ingredient of their product or service.
Okay, so you're saying quality control.
In terms of source, yes.
Okay. Anything else that they're doing in sourcing beyond quality control? Well, how was the relationship with coffee suppliers?
Yeah, relationship, I think there is a point. Relationship with suppliers were very good. I mean, Starbucks had that. I mean, if there was any limited stock of supply, then the Starbucks was the preferred customer for the supplier. So Starbucks had gained that mind share of their suppliers.
Yes, so they were actually a preferred customer for
customer of
the suppliers. Okay, so that means they actually were a preferred customer. Anything else? What about sourcing portfolio? What was happening? Like, were they buying from one place, multiple sources, or what is it that they were really trying to do so that they really did not get into some kind of a mess in terms of, like, if the coffee crop goes bad in one country, then what?
Yeah, they also adopted the multiple vendor strategy in terms of sourcing, just to make sure that they did not run off any risk in terms of shortage of supply from any region or from any vendor. So even in that multiple vendor approach, they also used to do the sampling just to ensure that which one was the best and to be selected, even if they had ample supply. So they had that multi-vendor approach in terms of suppliers also.
Okay, so they had a diversified sourcing portfolio. That's what you're saying. Okay, let's move ahead. So if you said sourcing was one thing, so this is where the base level thing started for them. Because this is where they said, okay, we are going to have quality, we are actually going to talk about coffee, which is probably the best in the world or whatever. But then there was something else after this. What was it that they were doing after procuring the coffee beans that was adding to creating that value?
Yeah, I think then the next step, once the raw materials are available, I think it's the manufacturing process,
so
or ensuring that what
do you mean by manufacturing here?
Creating it's the roasting and blending.
Okay.
I mean, from the
Perfect. So what about roasting and blending? What is great about the roasting and blending thing? Was it something that could be copied easily by people, or it was something else?
Yeah, typically, if this is not experimented or leveraged or not done a deep analysis, yes, it could be copied. But the differentiator that Starbucks had was they created something called as the Starbucks signature roast by using proprietary softwares, and that was not copyable. So that was one differentiator again in terms of the roasting exercise. So I mean, it mentioned that to build signature roasting curves. So they did a deep analysis in terms of what's the best combination that would give that great taste or flavor, and they invested, probably, I think they did significant investment in this process, which was very key to give that kind of a taste. And once they have had that magic formula, it was not easily copyable by the competitors.
Okay, so this was about roasting and blending here, so signature roasting curves and so on and so forth. Great. What is the next thing that they actually did after this?
I think there's one more point that it's mentioned, that the one-way valve technology extended the shelf life to 26 weeks. That was another thing.
So
that
of course, so like they
invested.
They actually started looking at this whole thing of coffee, especially the roasting, blending, as art plus technology.
Yes.
That's what you want to tell me?
Yeah.
Great. So this is an important issue here. What was the next thing or the next step that they actually did? Okay, let me just talk to somebody else also. Let me see what they have to say, and let's extend it here. Thanks, Suresh. Excuse me. Okay, Patabi Raman.
Post this, they had their team in place. I think they had they had shown a lot of importance in recruiting the right manpower.
Before this, there was something else that they were doing. What was it?
I think manufacturing.
What about distribution?
Yeah, I think they had distributed to failing on this. Yeah, I think they had the retailing strategy. I think they had the retailing strategy online. They were also trying to get into the doppio strategy, which was making small inroads into places which were not targeted earlier, especially the train stations and things alike. They were also getting into institutionalized kind of a business, especially the specialty sales, as it is called, especially with the in-flights of United Airlines and their deal with PepsiCo and things alike. And I think they also had some sort of a distribution which was happening only in the daytime to hit a certain target of the society, were called day part chains. I think that was in terms of distribution.
Okay. Anything else that comes to your mind on distribution? What about the forecasting model? I think, what about the forecasting model? Anything on the forecasting model?
Not that I'm able to
remember
anything on that.
So they had a fairly good forecasting model in terms of like what is going to get required, where, what kind of coffee, and so on and so forth. So they were able to really forecast demand very, very well. In fact, if you really look at this, in a distribution business, and I think in coffee it's not so extreme, but in things like, say, when you talk about white goods, so when you talk about watches and so on and so forth, there is a huge problem of what we call as the bullwhip effect.
Inventory.
Yes, the bullwhip effect, right? So in fact, that is a huge strategic implication, because that could actually give you huge levels of losses and huge levels of accumulation of inventories over a period of time. So at least if you are able to have some very good forecasting in terms of what the customer is really looking at, then you are able to negate this bullwhip effect. And how do you negate this bullwhip effect as ideas of seasonality and so on and so forth. Not a purview of this course, but then I think if you want, you should actually read something on operations and supply chain management, and this is where you could actually get some very interesting points of view. Sure. Okay, so distribution was one thing that they've actually done. Anything else that comes to your mind, Raviraman?
I think post distribution is creating an ambience. I think I don't see anything beyond that. Yeah, they did have a great experience with the opening up of their formats. I think they had a very nice tie-up with the real estate, which is unheard of. So probably they seem to taking them into confidence. I think the skills on expansion through their own formats, through the to getting the right kind of format, even if it is a corner was very well managed, especially with the real estate agents. Even if there was a deficit in in payments, they used to. I think they had taken care of their payments too in terms of their commissions. So I think that is something to reckon with. I think once that was in place and the product in place, it was only more of a delivery per se post this. And that delivery took place at their counters with the trained staff, and that was more on recruiting people from the quality recruitment, which was not compromised, and the training which everyone right from the senior management to the baristas got it. Very specific, telling that if a consumer had come in and asked for a certain meal, and post the meal, what kind of a coffee would do well with the particular meal. I think that is something which the baristas are trained to answer. So that is more in terms of recruitment and training and development.
Okay.
So that was more of consumer insights. Yeah.
Exactly. From a customer point of view, he was really made very, very happy, right? Because all of this was really adding up to the experience that would actually happen at the level of the customer. Okay, anything else that comes to your mind? In fact, okay, let me talk to Anupama Pattabhiraman. I'll get back to you somewhere down the line. Yes, Anupama, you have an interesting point here. Yes, please go ahead. Anupama, you're not audible. Hello? Could you just unmute your mic? Anupama, I can't hear you. Could you unmute your...
Yeah, am I audible?
Yes, Anupama,
Yeah,
please.
it is unmute. Oh.
Perfect, now it works. Go ahead.
Supplier roasting and blending, where it was the packaging was unique to ensure the
I'm losing you. Hello? Could you just ask your local coordinator to help you? I'll get back to you. Sure, so yes, Visu.
Hello?
Yes, Visu.
Hello?
Yeah, Visu, I can hear you. Okay, do you have something to add here?
Okay. Yeah, basically they have done that the prime activities as well as the support activities very equal way. They have given importance so that they were able to successfully roll out the practices which they are following in one place to another place.
Anything else that comes to your mind? So what they've done is, like, when you say support activities, it is about leadership, HR, training, and so on and so forth. That's what you really want to say. Okay. And when you say primary activities, something very similar to sourcing, roasting, distribution, sales, and consumer. everything
and
is just falling into
the way
place.
the real estate.
The way the real estate.
The way the real estate approach they have approach that street sniffers.
Okay. So makes sense. Okay, now
So
I must
that
ask.
they were
I must ask you a question here. So if you really look at this, Starbucks is a sum total of quite a lot of things that was actually happening across the value chain. And now if I really want to make a choice, and that is whether we should go ahead and have a tie-up with a place like McDonald's, do you think I should do this? Do you think we should have a tie-up with McDonald's? That is where the case starts.
no. If you look at, you have a identity, unique identity, and you have the differentiator. So we, as a company, you should not do the joint venture with the McDonald's kind of thing, because they also do the same real estate approach, and they expanded their businesses across all the countries. We can take those best practices, maybe we can implement the options which we have already, and one of the area we can explore it and we can try from there.
Okay, so if you're saying that they have a similar kind of a real estate approach, that means there is a certain level of synergy that exists between these two players. So if there is a certain level of synergy, then why shouldn't they really go ahead? What is it that is going to stop us from going ahead with this?
Actually, the experience, what the customer really getting in Starbucks, people not really going to McDonald's to get that pleasure. So the McDonald's is the place where they want to go eat chicken or burger, but the Starbucks is the place they want to have a pleasure. So that's where the difference is there.
Okay, so the experience that actually comes across to you when you actually go to McDonald's is very different to what you're saying in Starbucks. What is it that is actually happening in McDonald's? How do you differentiate the experience here? Just for the sake of understanding.
No, the experience what you get in McDonald's, it's mostly like fulfilling your hunger for what you have. But the experience what you are getting in Starbucks, it's not really you have a hunger or you thirst to have a coffee there. So you have something extra than.
Okay, what about the kind of people
really what you are getting?
What about the kind of people who go to both the stores? Is it the same kind of people who go to both the stores, or is there some kind of a difference?
It is a difference, Lord, because the people who really go to McDonald's, like it's for the food they are going. Like here, the people who are going there, it's who they want to have the pleasure.
What about the income classes? Could you tell me something about the income classes? If I really ask you to guess, what are the kind of people who will enter a McDonald's and what are the kind of people who will enter a store like, say, Starbucks?
Starbucks, it's mid and upper class, and McDonald's, it's more lower and mid class.
Okay, very interestingly, if you really look at it, at least in the Indian context, if you really look at a place like McDonald's, it's probably being positioned towards the kids. It's a fun place, and it is something which is where you actually go and you're going to be out of that place in less than 15 minutes or 20 minutes. You've had your meal in 20 minutes. So it's about just a very quick getting in, getting out kind of a model. And probably in the US, it is more for a poor man. Actually, it's a poor man's restaurant there. And if you really talk about a place like Starbucks, Starbucks is something which is very serious. It is about going in, sitting down, having some kind of a good time with your peers, your friends, and so on and so forth. So I think both the experiences are not really going to gel up together. So it doesn't really make sense to really have this kind of a association. Okay, now if I really decide that this is one association that we should not have, there is another question that we are really looking at. And what is that one big question for growth that we are looking at? So how would you really say, what are the various things that this company could actually look at? What are the various things that they could look at? Newer opportunities, what are the new opportunities that this company is looking at? How do you actually make a decision? And so on and so forth.
Okay, the thing they're doing with PepsiCo and the specialty sales, the specialty sales will give more opportunity to grow for these people.
Okay, anything else? Have you heard of a model called the Ansoff model, the Ansoff matrix?
To be honest, like before the session, so I had some discussion with Murli Sundar. So he showed that hands-off analysis.
Okay. So
let me the existing product.
Okay. Let me talk to Murli on this then. In fact, I'll just catch hold of Murli. Yes.
Yes, doctor. Audible?
Yes, absolutely. Go ahead.
Yeah.
Not
so you're catching me, then I'm running away.
Please tell me.
Okay. See, I won't be able to give so much dope about the Ansoff model, but I looked at it from the perspective where Starbucks has done quite well in its existing market. It's one of the most profitable company with very high market caps, and their EBITs are pretty phenomenal, with the return on investments being pretty good. So they really probably they're in a level where what next is probably the big question. So that's why they have options to look for.
Okay.
Where their options start from products. Now, what can we do with the products? Then you look at the trends in the products. The trends in the products, if you actually look at it, talks about the new blends, and the take-home packs seem to be some of the new trends which are happening. So if you actually look at the exhibit 2, where they compare the regular coffees, decaffeinated, specialty, regular, and whole bean and ready to drink. The ready to drink seems to be very progressive. Next is the whole bean. So there is an opportunity for Starbucks to look at these new products to enter into their existing markets. So there is one opportunity which you look at, so which you fit it in probably existing markets, new products. Before that, if you actually look at the existing markets as well, if you look at the penetration level of the of Starbucks, they're talking about 34% in the market which they could probably enter. So all is not lost even if you look at the American market by itself. It's only 34% penetration. And there are about some 485 standalone cafe units which, offer specialty stuff but they are not having any big plans to diversify and things like that. So probably, there is an opportunity to look at these stores and also look at a franchisee model, because you're looking at quite an expansion. So wherein a franchisee model is probably do your business at other people's cost. So these are the two options which one can look at an existing market, and with the existing portfolio, how do you move up? Then in terms of existing markets, new products, we anyway know the trend, what has been mentioned here. The two types of coffees, where the ready to drink and the whole bean, which is offering a potential for us. Then you look at the new markets. That's where we talked about the tie-ups and joint ventures. So you have an existing product range. How do you take it to the new markets? See, there are options that they have as they enter on themselves, for which also, if you look at their own analysis of unit economic trends, it isn't bad for them to actually do it by themselves, because if you look at the estimated average sales investment, which works out to 2.3x, their earnings before interest tax about 17.6%, which is very similar compared to their 94 trends. Then the returns are almost at 40%, so they have an option of entering by themselves. But then the issue would be is how well you know the market there, how well you will be able to understand and replicate the success that you had in America, probably in an unknown market. So that's where probably they looked at options in terms of the existing players. Among the existing players, since it's a food business, so people who already have experience with doing food business or restauranting business could offer an unique opportunity for being their franchisors there. So actually, Starbucks can look at a master franchisor in the new markets and actually start exploring franchises. Not necessarily what Visu spoke about. You have a Starbucks within a McDonald's, but then you actually have a Starbucks outside, and it has been managed by the owners of the McDonald's franchisees, because you need the business acumen of a franchisee. So that way you can actually look at that option. The other thing which in any case they were looking at is the supermarkets. Now, many of the supermarkets are actually global. They span across many countries and continents. So actually that could be another way where you can look at, once you have your ready to pack and the whole bean coffee, which you can offer it to these. And since you also have a supply chain where UPS has been asked to innovate, to kind of hold fort in terms of their strategy, I think it should help them to even reach these kind of supermarkets. So that would probably attack the existing products with a new market kind of a portfolio. And then comes the diversified ones. Now, why diversified is important for Starbucks is, they are moving from a captive audience where they were able to give an experience by creating shop, the ambience, the fragrance and things like that. But once you're actually kind of moving away or adding things like coffee in the aircraft, coffee at home, coffee at another party and things like that, then you need to have this change. That in fact, if you look at their marketing head saying mood upliftment is what they're moving from, an ambience to this. So when you do that, you need certain props or accessories that could remind you of what you would otherwise experience in a coffee shop. Say for instance a souvenir, a kind of a miniatures of a coffee brewing machines, or mugs and coasters at home. When you have it, you see them, you actually feel that you're probably having it in a barista, in a Starbucks or something like that. So it is an important thing, but then it's high risk because you don't manufacture them, you buy them, they don't sell because it's going to be priced very high because you're from Starbucks. So to that extent, it will definitely be one kind of not a very usual stuff. So this is what I looked at as a diversified portfolio, so that its coffee is their business. How do I see this whole thing is now existing markets and existing products, existing markets and new, how do you develop the business? I think it's a little low risk kind of a thing wherein you'll have to just, this market well, you'll have to just hire people and expand well. And existing markets and new products, the market again, you're just catering to something. So this offers a little better, or a little more risk, but then still under controllable. The third quadrant, where you have an existing product, a new market, offers the relatively higher risk because the market is unknown factor there. If the market is addressed by way of looking at experienced partner there, then probably you will be able to take care of that. The other one is your new markets, new products is a completely risky strategy which you can always kind of use it as an add-on and not bank on your entire resources there. So this is how I looked at it, and I said the initial strategy should be the kind of increase penetration within America, and then add the new lines which is in trend currently, which is your take home and coffee blends, and then either parallelly or you move into the new markets and adding the diversified portfolio.
So have I really put it right here in terms of like what you're saying, 1, 2, 3, 4?
Yeah.
Exactly. Okay.
Yeah, doctor.
Very interesting sets of points here. But I would just like to take it a little further here. So when you say we are actually going to look at, say, franchising as a model for market penetration. You've said that, right? So there are two big things that you're saying. One is that we look at market penetration through franchising or to go on their own. And we have to make a choice here.
Yeah.
And that's a very important choice that we have to make here. And the second one is you're talking about product expansion in terms of like going for probably trolley-based coffee or whatever. There are so many things that this company is talking about. You talk about Doppio and so on and so forth. So coming to the first one, when you talk about market penetration and typically franchising or versus your own stores, what is your decision? Your decision, and how would you take that decision?
See, if I look at, they have a lot of cash. See, I'm actually going from the second cup, which was another competitor.
Tell me your decision first.
My decision would be to in markets outside to franchise.
In markets outside, that means non-US markets?
Yes.
Okay. So what about the
And within
American?
US we have the owned operation.
Okay, why do you say that we should have your own, or why should they have their own operation in the United States?
See, basically, the point is I'm trying to reduce the risk levels. Now, you know this market very well. The acts of, the kind of image that you built in there. So it's easier for you to operate on your own, capabilities and strengths. But in a market outside where you have less knowledge about the market forces, it is always better to use somebody who already knows about the market to help you do your business rather than we going and doing, passing through the complete learning curve and then stabilizing in a new market. That's really the logic which I come from.
Okay, so what you're
From
saying
financial
is,
point of view, I think
yes, I need to understand
the
this
Exhibit
financial
4
point.
actually says, but Exhibit 4, where they talk about investments per store open during the fiscal year, I think they seem to be having a fairly, profitable model of setting up stores.
Uh-huh.
So if this is the case, then I don't think they need to go in for any franchising.
Okay, can I ask you a very simple question here? What is Starbucks business now? If you're really saying that they know how to manage their stores, they know about the real estate, they understand this. So what's the real business of Starbucks? Is it coffee or is it something else? Or is it actually moved beyond coffee and experience?
I think it's moved, to me it's moving beyond coffee.
It's
That's
moving
one of the
beyond
first
experience.
questions which they ask in the first page of the case, where they say, was Starbucks going the best possible way? Was it overextending its quest for growth?
Yes.
I think when the marketing head says that I'm going to move from an experience to a mood upliftment, I think there is a significant strategy shift that I see, wherein instead of a captive audience, you're going to have a mobile audience. So it's going to completely paradigm. So when you're moving here, then it moves beyond experience, and it's to me it's no more experience. It's actually offering a great coffee.
Okay, but then just taking a step back here, and if I say that okay, it's about there are three things that are happening here. One is what we said, that this is a business of coffee. The second was a business of experience, and the third is a business of real estate.
Correct.
So what is this business that this company is in today? Because
This is a real estate.
Okay.
This is a very real estate driven business to me, because I think you need to have it in the right place.
Uh-huh.
And so
Let me ask you a question.
so that would be a front.
If you're an investor here in this company, when would you invest in this company? Or what would be the investor drivers for growth here in this company? Because if you really look at it, at the end of the day, the investor is wanting to get high returns on capital or return on investment that he actually
Perfect.
does. So what is it that is going to give him
That's
the
right.
maximum return on investment, and what is going to give him or give this company the maximum set of valuations?
Okay. See, if you take a franchisee route, I think there is going to be a drop in valuation. Because I don't think the turnovers of a franchisee is accounted as part of the company's turnover. So if you're looking at a market cap or valuation, then I don't think they gain out of this. So probably a franchising route doesn't help Starbucks in kind of raising their valuation up. But if you're looking from a consumer's point of view now, if I can get the same coffee across the continents, then your franchisee in terms of a consumer would always stay with you. So that would probably generate a lot of revenue for the franchisees, like what McDonald's do, but which is a completely a franchising model.
Okay. So give me a decision for US now. So your final decision is that we'll actually... Your final decision is that
own
we'll
the
go-
operations in
own
US.
the operations. Okay. So very interesting.
Yeah.
I'll actually leave you here. Let me go to Rajiv from here and see what he has to say. Yes, Rajiv.
Am I audible now?
Yes, absolutely, please.
Okay. one question you asked was, first of all, must thank Murli, the way he explained the matrix and how we build around it. But coming to your questions, one is what as an investor would drive value? One simple answer is number of stores.
Okay.
So these investors are going to, whoever is putting in money or who's thinking, they're going to keep track of, how many new stores Starbucks is getting into, because for them, it's simple, they know this company does it well, so the more number of stores, more sales, and the way the Exhibit 4 shows the numbers, for every cash that is invested in a store, you have 40% return on investment.
Mm-hmm.
But now let's look at the Exhibit 9, and at the time this case was written, 1997, which is, how many further stores? Starbucks knows in America there's a lot of potential. So
Absolutely.
Existing product, existing market penetration is definitely something they need to do, but they may not have enough cash, or their entire ability to raise further, cash and debt. It definitely exists. One has to do the numbers. You need 340,000 per store. You probably have, you can go up to debt, let's say at least 1 to 1.2 times. So it's 300. You can probably go up to another, every year you can probably go to another 20, 30 stores. I mean, I'm doing the numbers very fast, so I may be wrong, but...
Do you want me to help you with numbers?
Yeah, why not? Why not? That'll be interesting, actually. Yeah.
Okay. So what you're saying is that they cannot do beyond 20 to 30 stores, right? That's what you're saying?
No, I could be wrong with the 2030 number, but one has to do those numbers very fast.
Okay.
That,
let's do it one by one.
What are their net earnings? Yeah.
Yeah, let's do one by one here. What is the total cash investment per store? They actually give you some figure.
340,000.
Right? So investment per store is something like, say, 350. Yeah?
350,000 US, yes.
Yes.
Yep.
So that's what it is. And they're looking at how many stores in the first year? Say 1997. First year is 1997, because they're actually talking about an expansion plan for the next 3 years. Right? That is what we are really discussing.
Correct.
So what is the number of stores that they're looking at? They're saying they're going to talk about 900 to 1,000 stores in the next 3 years, right? That's what they're saying?
Correct. Something like that.
Yeah, so can I say we are talking about 300 stores in the first year?
Correct.
Okay, so what is the total money that is going to be required?
That's about...
This would be... Sure?
Yep.
1,05,000.
105 million.
Yes, so
yep,
that's
105 million US
so that's
dollars.
what they're looking at. And what is their forecasted income from the stores? There is some
forecasted income from each store is, it's about 40% of this. So, for interest and taxes.
And then remember, they're also talking about a share issue somewhere down the line.
Yeah, don't remember where that comes in, but I'm sure it's there.
Yeah, so they're actually talking about a share issue. They're expecting a share issue. In fact, what I'm trying to say here is, what you say is very interesting. If you actually look at existing operations, then your contention is absolutely correct. That they cannot actually go beyond 20 or 30 stores. But the moment I say, okay, now they're actually talking about a share issue, they're actually going to get funds from the market. And they're going to get funds from the market, and for Starbucks, it's going to be a lot easier to actually get a share subscribed and so on and so forth. In fact, they were actually saying that they're looking at $35, $36 per share as the issue price. And they were looking at some a large number of shares that could actually get into the market. And so if they would be actually collecting a lot of funds with the share issue here, right? But once they actually get that money, they could feed in the expansion. And this leads us to a very important question. Because if I really look at the market drivers for growth and the investor drivers for growth, they're very different. The market drivers for growth would typically tell you that, okay, now we should go for our own store, we should have Starbucks stores, we should actually open more stores, but the market driver would say that, okay, now we could actually go for something called as okay, am I audible?
Yeah.
Great.
Now there was a lot of disturbance earlier, but yeah.
Sorry. Okay. So if you really look at this whole idea, there are two things that we are looking at. One is the investor drivers for growth and the market drivers for growth. The market drivers for growth would compel me to say, okay, we could go the franchising route. But now we actually have some stakeholders called the shareholders are going to come in. How do you actually give them value? This is where we have to answer a very important question. In this case, what is this company all about? Is this company about coffee, experience, or is it about real estate? And what is going to create valuation for this company?
I would say, now I'll refine my answer further. So, I think this company is most about a brand.
Yes.
And so it's very important for the management of the company to ensure that the brand value either is maintained or is further strengthened. But since there is a growth opportunity, this company is definitely about stores. And therefore my dilemma is, if we remain in the business that is what we are good at, which is existing products, but penetrate existing and new markets, developing and further strengthening our brand, rather than thinking about leveraging our brand and bringing new products into it. So I both try to give an answer and also pose another question. So
the voice just cracked actually. Could you just repeat the last point?
Yeah, what I'm saying is, just to rephrase, the company is about a brand, so the management has to take that into account in every decision that they take.
Yeah, because they cannot actually let the brand be diluted. That's what we are saying.
Yeah.
Okay.
Correct. Growth has to be exploited. One, because it's hugely profitable. The penetration gap exists both in existing market and there are new markets to penetrate. So growth has to be exploited. And there is both internal accrual capability plus the capability to raise resources from the capital market. So growth has to be exploited, no question about it. And the rest of the value chain is in place to exploit growth of existing products in both existing and new markets.
Okay.
The route for new markets, as Murali was saying, can be franchising or partnership, because the only joker of the pack in a new market for Starbucks is, while it has great value chain of product distribution, supply chain, etc., what it doesn't know very well about Japan or China or Pacific Rim is the local market there, which Howard Schultz knew very well about America. So, since the local market knowledge is not there, you need to fill that gap, and the fastest way, or one of the fast way to do it is, before you learn the new market by being present there, is to either have a market partner or a franchisee.
Great.
But my dilemma is whether I should bring new products
or not
into my, which is the quadrant number 2, product expansion. I am, I'm questioning whether I should do that. Am I going to leverage my brand? Am I going to dilute it? Am I going to confuse my customer?
Okay. Can I ask you?
McDonald's shouldn't be selling Italian food. Yeah.
Yes. How would you actually come to a decision like this? What is the framework that we can use? We actually used a framework here. Let's take a step on this. So when I say, you said domestic retail expansion is something that should happen, whether franchise, and typically we are saying they should actually have their own stores because they have internal accrual capability, they can go to the capital market. Why are we saying this so clearly? For a simple reason that they have a value chain in place, which makes so much sense. and is actually adding back to the value chain of the consumer. Now, if I say I have to do something, what do you call, which can actually mess up their value in the mind of the customer, we should not do that. Are we very clear on that? We should not do something which is going to dilute the brand of the customer. That is one thing we are saying. So how do we really come to a decision here? So when I say international retail expansion, everything will work there, except the distribution part of it, because they'll have to really look at a way to distribute their coffee or whatever. So that's going to be one element that they'll have to look at. So it's not something which cannot be done, which is not very dangerous. So they can actually go for an international retail expansion kind of a thing also. But now looking at, say, coffee beans in a grocery store, should they actually sell coffee bean in a grocery store, or should they actually sell Starbucks coffee in Starbucks ice cream? Now these are two very interesting points. Both these things are about coffee. They are actually not talking about experience at any given point in time. It's about the flavor of coffee and so on and so forth. It's about that Starbucks brand that is going to get exploited when they sell ice cream. Do you think at any given point in time, if they sell these two things, it's going to dilute the image of the brand in the mind of the consumer? If they maintain...
My personal answer to this is,
what is your personal answer?
I think my answer is, I'm just thinking through, if I'm selling ice cream in my Starbucks store, I'm not going to dilute the brand, because I'm going to pick up, the right ice creams for my right set of customers, for the right income group, etc., etc. So I think ice cream will not dilute.
Okay.
It's a product extension. When I take the Starbucks and put it in a packaged plastic or a packaged box and sell it in a grocery store.
Incidentally, both these things are going to be sold in grocery stores also. Say coffee and ice cream, both of them are actually going to be sold in say grocery stores to a certain extent. So how because both of them will have
personally, I think I think my personal answer would be I'll go for it, or I'll try it. Why? Let me explain. It's going to be priced as per my brand, so I'm not going to, I have a great product, a great brand, so I'm going to leverage this value chain, but I'm going to be selective about which stores are going to retail this, so that, because I also know the habits of my customer, the American customer, while it comes to a nice third place to have a great ambience, the way it eats with ice cream and coffee at home is it goes to a superstore and buys it. So I know they like my product. I have built a good product. So I'm going to provide it at a place so that they can, where they normally go to pick up their coffee and ice creams. And I'm going to give them the choice. It's going to be a premium product. So the higher end of my customer is going to start taking that choice. And at home also serve a Starbucks ice cream, or, brew their first cup of coffee in the morning as a Starbucks coffee.
Okay, now
I'm going to do that.
Incidentally, I must share what Starbucks did here. They did exactly the same thing that you said. They got into a super premium pricing for the product. If you really look at ice cream market in the US, they started about $3 for a tub of ice cream. That's about 1 liter. This company started with ice cream which was exactly at about $8.50, $9 for that same tub. So exactly 3 times the pricing. Their nearest competitor was Haagen-Dazs, which was a shade lower than Starbucks, about $1 less. So they said, okay, we are going to be more premium than Haagen-Dazs, which was supposed to be super premium ice cream at that point in time. So that's what they did. And even for their coffee, they did go to the normal retail stores. They went to Walmart, they went to JCPenney's and whatever. But that again actually did a huge level of premium pricing. They priced themselves exactly about 2.5 times that of Nescafe, which was one of the most popular brands at that point in time. So they understood, what they're saying is about coffee, it's about experience, it's about quality, and that's what they're going to maintain, and they actually went ahead with this. But there was something very interesting. So now, what you're saying is, somewhere where the whole idea of that brand can be maintained, this company can go ahead. But what about one thing that they should not do? And that was about, when you talk about, say, expanding into a thing like, say, talking to McDonald's. They did not do that. For a simple reason, that there was a huge issue of how the value is actually going to be looked at by people, because McDonald's would actually create a huge negative for this brand. So they had to be extremely careful with that. And interestingly, when we really look at this whole huge idea about what happened with their idea of expansion in the local market. In the local market, what they did was that they went for their own stores. They knew they would actually be able to collect money, and they still continue to open their own stores. In fact, Starbucks had a very clear understanding that there are two sets of drivers for growth, and one of them is called investor drivers and the other one is market drivers. The market drivers could actually lead you to take some wrong sets of decisions, because you could actually suffer from something called as managerial obsession for growth. So you could actually go ahead and you could grow, you could open large number of stores and so on and so forth, but then in a franchising model the valuations will not come in. So they said, we are actually going to open our own stores, we are really going to look at investor drivers for growth, and they actually said, okay, now we open our own stores. They made a lot of valuations there. In fact, Starbucks valuations skyrocketed after this decision when they said, okay, we are going to maintain our own stores. Incidentally, in the international market also, the general idea was that they should actually look at, say, franchising route, but they did not. They started going for their own set of stores itself, at least within the context of India as well. Starbucks has been looking at coming into India. They've talked to a number of players, but they never got in because they said, we are going to have our own set of stores. We are going to have our own set of real estate, and that is how we are actually going to do it. So these are a few things that happened there. So very critically put, the biggest thing that we have to really understand here is that Starbucks was probably in the business of beyond what do you call as coffee and experience. They said it's going to be about real estate, it's about valuation, and that is what is really going to drive them. But then, of course, remember one thing, Starbucks is in deep trouble right now. Why? Because of the subprime crisis that actually happened in the United States. Starbucks is in deep shit right now. Because their valuations have gone down, the whole subprime crisis has actually created havoc. But there was one more important thing. In fact, if they had their own stores, they could do something very unique, because they did not have to build the territories around which they have to make their stores, because they could create two stores on the same street. And that is what this case also talks about, that they had opened stores on the same street because people were flowing in and so on and so forth. In the franchising model, this might not have been possible. It gets very difficult because franchising model will always give you some kind of a territorial possibilities, or whatever you want to use the term as. So that is what could actually happen. So very interestingly, whenever we are really looking at it, what this company should have done, we have to look at the internal capabilities, and then we actually start looking at answers. This internal capability issue, in terms of like how they build their capabilities across the value chain, can give us huge levels of ideas whether they should move ahead, they should not move ahead. And something like what Rajiv was saying, and what Murali was saying, and so on and so forth, was about how we can understand our capabilities here, how we can actually look at growth. So that is what has actually happened here. So we'll have a short break here for about 15 minutes, and then we'll come back. I'll give you some small dope on lips and hips, very, very quick one, and then of course we'll actually move on to the next case, and then go for the closure for the session. Sure, thank you. Hi. Just a very, what we are going to do now is that I'll try to give you a brief idea on what I believe is marketing and so on and so forth. Marketing from the perspective of a strategic viewpoint. There's just a few things that I would like to really say that what I believe in, and then we'll start building our things and content in the course that way. And then I actually sent you a question, would you like to do a session on competitiveness? So it'll be a pleasure to do that session. In fact, since we are going to do a session on strategy and location, so then competitiveness certainly becomes a part of it. So I thought might as well actually bring those ideas into the session. Incidentally, I thought I must share with you that we are releasing I am actually releasing my city competitiveness report, which is a study of 35 cities in India, and we are ranking those cities, and that report gets released on the 26th of September. In fact, two things there. So I think some of you have already seen a cover that I had done for Business World on state competitiveness. So this is going to be a cover that I do on city competitiveness. And this time, the report is being released by the Chief Minister of Delhi, Srimati Sheila Dikshit. So she's going to release the report on the 26th. And so this is what we are planning to do. But then around those ideas, I would try to give you some dope on what competitiveness is and what I believe in. And this is from the experience that I've actually drawn by working in that area for the number of years. So that's that is how we'll start building our session on strategy and location and so on and so forth. But then before I actually move ahead, I have a very simple question from some of you. Do you think needs can be created or not? I don't remember if I've actually discussed this with you, but then I'll just, with some of you I'm sure I've done that, but then I still have a question. Do you think needs can be created or not? Any ideas? Anybody who could give an answer here? Anybody who would like to raise his hand? Okay, needs already exist, so Amit says that, then Meena, yes, let me see. Hi Meena, go ahead.
Yeah, hi. Yeah, I think needs can be created. I totally agree because, see, I mean, what I mean is there is already an inherent need with every people. You just have to tap that need. I mean, sometimes we perceive, the consumers perceive that there is a need. Certain things are lie in depth. We really don't know whether there is a need or not. So successful companies actually tap this dormant need and then tap their potential.
So what you're saying?
That is my take on this.
So that means needs cannot be created.
Yeah.
Needs always pre-exist, right? That's what we are saying.
Yeah, no, yeah. Needs are there, but only thing you need to. Yeah, right. Yeah, that's right.
Okay. Very interestingly, I think a lot of us make a huge mistake by saying that needs can be created, but no, needs always pre-exist. Needs are something like there are two kinds of needs that we really talk about, and one of them is biogenic, and the other one is psychogenic. And when I talk about biogenic, that means they are bodily functional needs and so on and so forth. And psychogenic are my mental needs, something like which are driven by emotions and so on and so forth. So if you really look at it, needs always pre-exist. I'm not creating a need or whatever. What happens is needs, I create demand for my products. I do not create anything else. I can make a person aware that, okay, now this is a very interesting solution for a problem that he's actually having or whatever. Now, incidentally, if you really look at very simply put, the need to travel always existed. But then there were different sets of solutions that came around and they were faster and so on and so forth. But building on this, if you really look at it, there is something called as value. From how we fulfill need is that we actually give value to the customer. And what is value? Value is benefits minus costs. And when I talk about value, value is about making a customer get what he's looking at and something that gets embedded within the value chain of the customer. So what Starbucks was doing, that he was trying to give value to the customer, and these two value chains were actually getting embedded. But now if we really look at this value thing itself, this is where we have to understand that there are two sets of products that we look at. One is low involvement products and the other one is high involvement products. And when you talk about low involvement products, they're products that we actually pick up without thinking, something like a matchstick, and high involvement products are products which we actually pick up with lots of thinking. And there are two kinds. One is ego expressive and the other one is utilitarian. Utilitarian products are products which have a long shelf life, like washing machines or refrigerators or whatever. And when I actually talk about a ego expressive product, it could be a Mont Blanc pen or something like a very swanky watch or a very expensive car, which becomes a reflection of my personality. So these are low involvement products and high involvement products, and we at times say that they are lips and hips. But then now the question for companies is, how do we actually make lips to hips, or how do we make a low involvement product to a high involvement product? Very interestingly, in fact, I must share one example with you. A lot of other examples I have actually shared with the people who had actually done the session on innovation in turbulent times. So I would request all of you to actually see that if you've not attended that session. So there are some of you who have not seen that. So just go through that video. But then just one small thing in terms of like how industry evolution also stacks up on the idea of creating a low involvement product to a high involvement product. Say a very simple commodity like a salt, and what happens in a commodity like salt is that salt was just salt at one point in time, but then there was something else that happened in the middle, and there was something like iodized salt. And after iodized salt, we said, okay, we are going to have low sodium salt or free flowing salt and so on and so forth. Then there was this dandi namak that happened. But now if you really look at it, what is happening is there is a clear-cut evolution in the market, and there is a clear-cut evolution in terms of how involvement is actually rising in a very simple commodity like salt. In fact, this message is for Rajiv. Now I remember I have to send you those articles, and I should send it across to you today. But then, if you really look at this, like it is about like how we go beyond commodification, or how do we beat the commoditization syndrome, is like in terms of like how do we really create value and add value. When I say adding value or creating some kind of an experience, that's about moving beyond that commodity cycle. Say when you talk about a very simple thing like coffee, coffee is a commodity at the end of the day, and what we have done here is that we have actually trying to beat the commodity cycle. We are saying, okay, now for a simple cup of coffee, which would have actually fetched or got me something like 5 rupees, and I'm now able to charge something like 100 rupees for a cup of coffee. What is it that I've actually done? I've added the idea of experience around it, and we have created a whole huge idea. We have created a whole huge industry around it. So you've beaten that commodity cycle. So you've actually moved into services. In fact, there are a lot of people who've actually said something beyond it, and that is, how do we actually go into, say, something like, we are in the business of marketing dreams. In fact, Tom Peters actually says that you're not in the business of marketing products, you're not in the business of marketing services, you're in the business of marketing dreams, and what I actually call as solutions. So whenever we are actually trying to sell something, from a strategic viewpoint, we are all trying to give solutions for a certain set of need that all of us have actually got. So these are a few things that we need to understand from a very fundamental viewpoint. A very simple thing in terms of like what is happening in this class. It's some kind of a need that exists, and we are trying to use different sets of technologies to actually disseminate knowledge and so on and so forth. So this is all about a solution that has actually happened. So naturally what is going to happen is that there are new sets of services that could arise after a while, and you might actually have new sets of industry structures emerge over a period of time. A very simple example here is something like what iTunes did. And iTunes was about, what do you call as, it's actually got into a service wherein they're selling disaggregated music. They've disaggregated the CD and they're trying to sell the music to you, and people are willing to pay for it. And look at the kind of revenues that company has actually made. So services are going to be something which are going to be very important, and that is what is going to help you to beat the commoditization. In fact, if you really look at it, even something like cars or car manufacturers are today actually looking at how cars are going to be commoditized over a period of time. They are actually not going to carry any meaning, and they should actually go beyond the idea of what do you call go beyond the idea of manufacturing cars, and they're actually talking about making services, and they're actually saying that we're going to talk about integrated urban transport mechanisms and so on and so forth. So very, very simply put, it's about creating services around various things. In fact, when you talk about a company like Kingfisher is also about those services and so on and so forth. So these are a few fundamental things that we need to look at. So now moving to the next session on strategy and location. Like this is where I should share one thing with you, and that when we talk about location, it is fundamentally driven by a very powerful tool called the diamond. In fact, there are 3 categories at which we do the analysis, incidentally. In fact, if you really look at it, what we have done is that we have actually said there is something called as the industry analysis, there is something called as the value chain analysis, but there is something called as the diamond as well. In fact, so we actually move from say diamond to, there is something called diamond, and then there is something called as industry analysis, and there is something called as value chain analysis. So when I really want to understand things, so what we did was, when you talk about the diamond here, diamond tells me more about the location. What is the idea of the location, whether the location is doing well, whether it is going to be the right place to start a unit, whether it is going to have adequate demand, and so on and so forth. And when you talk about industry analysis, this tells me about the profitability, possibilities. Value chain talks to me about capabilities, right? Something like what we did today. This also tells me about comparative advantage, and so on and so forth. When you talk about industry analysis, it tells me like what are the drivers for profitability, what are the drivers for change and growth within the industry. But when we talk about the diamond is typically about 4 things, and diamond is something which is going to tell me about how the location is doing. In fact, what I really talk about in the diamond is 4 things. And what are those 4 things here? In fact, in this whole thing, in this 4 things, one is something called as the factor conditions. Because if you really want to make a fundamental choice here, in terms of like, how would you really make a choice of entering into a location? You would first really try to understand what are the factor conditions. That means land, labor, capital, and so on and so forth. Traditional economics view. So factor conditions, whether land is available, whether labor is available at a cheaper price, or what's the price of labor, how easily is it available, whether the labor is educated, not educated, whether we have adequate talent, whether the educational infrastructure is right, and so on and so forth. And of course, whether capital is something which is easily available, whether loans are easily available, and so on and so forth. So this is what you do to really understand a location. And the next thing that you actually look at is something called as demand conditions. And when I really talk about these demand conditions, what I'm really trying to understand is what is the sophistication of demand. If you really look at this idea of sophistication of demand, what I'm really trying to say is, what is it that we are going to fundamentally focus on? What is it that customers are really going to buy? Is it that they're really going to buy cheap products or low-end products, or is it that they're really going to buy high-end products? It's going to be, again, when you talk about sophistication of demand, very simple example would be that is it that the country is buying, or is it that the location is buying simple 1,000 rupee, 1,200 rupee telephones? Or is it that they're really looking at a very high-end, telephones like say, which could be priced at about 30,000 rupees? So when you talk about sophistication of demand, that is also really going to be looked at in the kind of products we are buying. How many refrigerators, what kind of refrigerators, TVs, what kind of TVs, 2-wheelers, 3-wheelers, 4-wheelers, and what kind of 4-wheelers, and so on and so forth. So sophistication of demand becomes very important. In fact, this is where, if you really look at it, India becomes a very interesting country to look at. For a simple reason, when you talk about India, India is not about one single entity, because demand is hugely disparate here. There is so much disparity within people that it becomes very exciting to see this country. In fact, if you really look at the top 10%, this is like huge levels of sophistication of demand. And then there is something called the next 20 to 30%, what we call as the middle class here. Not somebody who's going to spend a lot of money, but they are price sensitive, then they look at some very exciting products. So this is here, and then of course there is the bottom 60%, which is extremely poor. Incidentally, I do not know how many of you know that about 44% of India lives below the poverty line today. In fact, now this is a debatable point, because a lot of people would say that 26% of India is below the poverty line, but then that is according to the idea of what the government of India says. What is the poverty line? $1.08 per day on purchasing power parity. That means that anybody who makes less than 5 rupees a day, 5.5 rupees a day, is somebody who lives below the poverty line. But then from World Bank's perspective, they say anybody who makes less than $2 a day on purchasing power parity, that means about 11 rupees, lives below the poverty line. But now this huge definition of poverty is something which is hugely questionable, because what India sees is abject poverty and absolute poverty, rather than the way poverty is seen in Western nations. So the huge definitions are different, and so on and so forth. But this, if you really look at this structuring, this leads us to a very important assertion, that India is actually a bottom of the pyramid market. So this actually tells you like what the location is all about, and this kind of a framework would eventually help you to really strategize. And so if you really look at it, the next thing that we have to look at is something like context for firm strategy and rivalry. And what do we mean by this? And when I say context for firm strategy and rivalry, what I'm saying is what are the local rules, what are the incentives that are available, whether there are incentives to encourage investment and productivity and so on and so forth. What is the level of competition? Is it that is it a closed market? Is it an open market? And now this is where, if you really look at it, if competition exists and if it is an open market, it's something which is going to be very good for the system. In fact, the traditional view in India has been, at least till the last 20 years, till about 1991, the traditional view was that competition is not going to be good, it's not really going to do some wonders or whatever. But now if you really look at it, competition has done wonders for this country, because people, one, have huge levels of products at the right prices, the appropriate prices, and one of the biggest examples is like our state-owned BSNL, which used to screw us up at all points in time. Like I'm sure you remember the time when you were paying something like 75 rupees for a minute of call to US, and today we are actually talking about free calls to US using technologies like voice over IP. And if I actually use services like what do you call Bharti or Airtel or whatever, I am able to get calls for about 6 rupees or 7 rupees to the United States. So there is a huge change that has happened. At that point in time, 75 bucks used to be huge. And if I really look at those 75 rupees in say 1980s, could be equivalent to 500 rupees today. And any one of us would not be willing to pay 500 rupees for a minute of call to US today. So if you really look at it, competition does wonders. And competition does wonders for the customers. So we have to understand like, whether competition exists or not, whether it is enough to expand the market and so on and so forth. And the last thing that we have to look at is something called as related and supporting industries. And what do we mean by related and supporting industries? As like whether we have something like good suppliers in the market or not, whether we have something like presence of clusters in the system or not. And when we talk about presence of clusters and things, what does it mean is like whether we have, say, something like Gurgaon. Gurgaon has huge levels of associated firms with Maruti, and so they are actually huge suppliers and so on and so forth. So are there deeply embedded networks of firms which actually help each other grow? So because if that happens, that means the suppliers are actually going to give you some very good product. And clusters eventually, because if you have clusters, that means there is going to be some knowledge which is going to get created in the system. And because of that knowledge, there is always an upgradation of knowledge, and then what is going to happen? It is going to create competition, it is going to create innovation, and so on and so forth. So if you really look at this, this whole idea of a location is not something very simply, it cannot be looked at in a very simple format. It has to be looked at from a very deeper perspective. That there are 4 distinct things that we have to look at for a location. And of course, there is something called as regulation. When I said regulation becomes very important part of this whole thing. In fact, there are countries which have done exceptionally well. India is a high growth market, but then India is ranked very, very low according to the Global Competitiveness Report or the IMD's Global Competitiveness Yearbook. They all rank India very, very low. But then there is a small obscure nation called Finland which is ranked very, very high. It is actually ranked number 1 today. In fact, in last year it was ranked number 2. About a year back, before that it was ranked number 1. And the new results are actually going to be out day after tomorrow for the World Competitiveness Report. And what could be the expectation is that India is actually going to lose a couple of rankings somewhere. Probably or else it's just going to be there around within those 2-3 places of whatever it was actually ranked at. So why does this actually happen? It is primarily driven by the regulation that actually runs in the country. Because if you really look at it, India actually has a huge problem of regulation, whether we like it or not. There are some sectors which have actually got devoid of regulation, or there is less regulation and they've done well. But then there are sectors where regulations are huge and those sectors have not done well. And regulations are, having huge sets of regulation is not a problem. But having idiotic regulation is actually a problem. So what India has is not smart regulation. India actually has useless regulation, which actually comes in way of creating profitability or creating prosperity. So I think what needs to be understood very, very clearly is that regulation is required. It is not that everything is going to get deregulated or whatever. It cannot be a laissez-faire. It cannot be an open market, because capitalistic systems, in fact, have their own sets of problems. And what are the problems that we actually have in the capitalistic systems? Capitalistic systems would eventually give wealth to very few. So we need to have regulation where that kind of a problem does not happen, where wealth is going to get accumulated with very few. So we need to have very smart regulation that does not happen. Competition happens, lots of mergers and acquisitions do not happen, and the customer is not actually getting exploited. So we need to create regulatory systems which enable competition, which enable growth, which enable things like demand, and so on and so forth. In fact, if you really look at the new tax laws that are actually, or the tax code that is actually going to get declared. In fact, the next the tax code is something huge actually from my point of view, and it's huge for one single reason. And it is big because it is actually going to create huge levels of demand conditions in the country. I think that is going to be one of the smartest things that could happen. In fact, yesterday only, Economist has actually declared a very interesting study, which says that Indians are one of the heavily taxed countries in the world. In fact, people like you and me, Economist says that we are taxed up to the extent of about 43-44% on our income, which is absolutely huge. In fact, from my point of view, in fact, 43-44% when Economist says that, I fundamentally believe that it is very, very less, because from my point of view, people who are at the higher end of the income brackets, they are taxed to the extent of about 60%. And that's because of the basket of goods that they actually consume and so on and so forth. In fact, if you really talk about something like fuel, it is taxed up to the extent of 120%. So the farm gate price, or what do you call it, the gate price or the factory gate price or whatever they call, is about 20 rupees today, or just near about that. And we are actually paying 44 rupees for that fuel as of today. So why does that happen? So this means that the regulation is actually coming in way of growth. And these are the things which are going to create inflation. These are the things which are going to create huge levels of problems somewhere down the line. So we need to actually get into a system where we enable the environment to really do well. So regulation has to be smart, which enables. And so when I talk about the tax code, so tax code, when it actually is going to reduce the taxation rate to about say 10% or 20%, that means suddenly people like you and me are going to have larger disposable incomes. And when we have larger disposable incomes, we are actually going to talk about more consumption. More consumption would actually drive growth within the industry and so on and so forth. So from my point of view, tax code is going to be one of the most important things that has happened in this country in the last, I would rather say 20 years, because after 1991, India has done exceptionally well, but then it was just about that things from 1991, slowly and steadily we have opened up our sectors and so on and so forth, but there's never been a step which was more significant than this tax code. Because suddenly, if you really look at it, my whole consumption basket is going to change, and that is going to create huge levels of excitement. So if you really look at this whole idea of a location, it has to be looked at from an integrated point of view. I think regulation forms a huge part of it. If I ask you a question today, what is the best place to start an IT unit in this country? How do you really decide that? You would actually decide that on the basis of 2 or 3 things, because the location idea itself, this is the extension of the location idea, and that is that India cannot be looked at with one single window. India is 28 different locations or 28 different realities, because each of the states has a different regulatory mechanism. You have different tax laws, you have different the way the bureaucracy functions and so on and so forth. It's very, very different. So we need to look at these 28 places or 28 states as different sets of locations, and we have to look at it from their reality. So why do you think a company like, say there is an IT company which wants to go somewhere, would it prefer to go to Chandigarh or would it prefer to go to Bangalore or Hyderabad? The obvious answer is that it will actually try to go to a location like Hyderabad or Bangalore or probably Chennai, for a simple reason that these are the three locations which provide adequate labor, and they provide adequate labor in terms of qualified labor. I'm using that labor as a term, as a generic term here, but then labor would mean like low end to high end or whatever, anybody, the managerial, blue collars, white collars or whatever. So there is a huge level of opportunity that actually or exists there for a simple reason that the labor is available at a very decent price, very talented labor. And when you talk about a place like Chandigarh, you'll have to really migrate people to that place. So you need to actually understand that like whenever an industry does well, it is always going to do well in a local, if you have the local conditions which are very good. Say a very simple thing, if your local conditions fail, and if your local conditions are not conducive for growth, then things will stop or things will start dwindling. For a simple reason, say, let me give you an example here. The example is in terms of, a lot of you must have heard the Jalandhar sports good cluster. What was happening is like it used to be one of the most prosperous clusters at one point in time, and that cluster actually just went down, and that cluster has not really done wonders now. Now, what has happened in that part of the world? Why is it that that cluster is not really doing well right now? For a simple reason, that one, there were no local demand conditions. The local labor and the local technology was an issue. Because if you really look at it, like the only thing Indians wanted somewhere down the line was they just wanted cricket bats and cricket wickets. They did not want anything else. Hockey was out, badminton was out, and tennis was out, and nobody was even interested. And technology moved ahead in the world. India used to be one of the largest manufacturers of tennis rackets at one point in time, and suddenly technology changed, and nobody even noticed. You had graphite, you had carbon-based rackets, and there was so much that was happening in the technology, and we just simply slept over it. Why did that happen? Because local demand conditions are not there. There was no local labor who was looking at it. There was no local educational institutions who were looking at that kind of a thing. So in fact, this leads us to a very important thing. When you talk about a location also you have to really make a judgment on what are the kind of educational institutions that actually exist. We talk about educational institutions with great affection here in the country, but then we have to understand one thing: what is the contribution of those educational institutions? Is that the contribution great, or is it that they're just getting the right very smart students and just doing nothing else? So we have to really look at these sets of things, because the idea is like whether we are really doing adequate research, whether we are making adequate contributions, and so on and so forth. So if you really look at this whole idea, the idea is to actually have 4 pillars that diamond do very well. But now when I talk about this framework of the diamond, it has 2 uses, or there are 2 sets of people who can actually use it. One is the corporate, for very, very clearly, because they can make an assessment on a location. And the second thing is it can actually be used by people like the government, because the challenge in any country is to really attract investment. It is really to attract FDI, or it is to attract factories and so on and so forth. And today the challenge is that you talk about China versus India, and both of us are really fighting it out in terms of like what is going to be more prosperous country in the next 30-40 years. I think the answer is very clear. Each one of us knows that it is going to be China, for a simple reason that they have infrastructure and such things. But then if India has to really look at it, so this diamond as a framework would tell that what is it that we need to change? What is it that we need to upgrade in the diamond? How do we upgrade the diamond? What kind of policy imperatives needs to be taken here? So this is where I actually say that we have something called as microeconomics of competitiveness. This whole idea of competitiveness is about prosperity. The whole idea of competitiveness is about creating more wealth for people. And how do we do that? We need to have regulation which talks about microeconomics, which talks about enabling the microeconomic environment. That means it is about enabling the environment for the firms. And if we actually do that, that is when the country's diamond would actually move ahead, the location's diamond would actually start moving ahead, and we'll actually start talking about prosperity. So this is what the whole thing on diamond is, a preliminary idea on how do we really look at competitiveness and so on and so forth. But then if any one of you has questions on this. Okay, so I believe, okay, we have Rajiv here. Yes, Rajiv. Rajiv, I'm sorry, you're not audible. Rajiv, could you unmute your mic?
Yeah, is it better now?
Yes, please, great.
Yeah.
Looks good.
Can you hear me now?
Yeah, absolutely.
Yeah.
Do.
So, in the context of location, I'm asking this context from a question of, if one is getting into a new industry, or one is, let me divide my question into halves. If one is a complete startup operation and is getting into a new business, then he has the choice of looking at this, this entire framework from a clean slate.
Exactly.
And therefore taking a correct strategic decision about location. Question is for an existing business which already is present and in a certain place or a framework, whether it's Gurgaon or Chandigarh or Panchkula or wherever, and now hears about this framework and starts understanding yes, there is an importance of location. So for him, he will always have a big hangover about how does he change location. Like thinking about a 200, 300 seater BPO operation present in Gurgaon, will he ever move to Hyderabad?
So you need an answer on this? Or,
your preliminary thoughts on this.
I would not like to answer on this because I think the Indian flour mill case is exactly about the issue that you're raising here. So I would like to leave it for that case to happen and let us think through it. The answers are there. The answers are very interesting. But then if you really look at moving from Gurgaon to Hyderabad, let's look at this hypothetical thing. I think the biggest thing you're really going to look at is the cost of labor, say, the cost of doing business. And if you really look at the cost of doing business in Gurgaon, it's bloody horrific, yeah. In fact, we just recently did a study. Of course, Gurgaon is, if we keep the results between us, because the results are going to be declared on the 26th actually, but then Gurgaon is ranked number 12. And I remember that very distinctly. And I felt so bad about it because if I had my way, I would have actually ranked Gurgaon 135th in this country. But then Gurgaon, so Gurgaon is ranked number 12. And Hyderabad is way ahead, and Hyderabad is no comparison because of the quality of infrastructure, to quality of support from the government, to the quality of labor, the price of labor, and so on and so forth. In fact, there are a lot of companies who have actually made a decision to move from this location to Hyderabad as well. In fact, when I was the chief economist with Data Monitor, we actually made a decision to move the whole Data Monitor's business, lock, stock and barrel, from Gurgaon to Hyderabad. And it was one of the most fantastic decisions that the company made for a simple reason. We were able to reduce our cost by 50%. And in a business like that, if you're able to reduce your cost by that level, that means your profitability is huge. In fact, we were actually doing business worth $1 billion here, and then suddenly our profitability scaled up to a great extent. If you really look at it, this is a very interesting thing that we can look at. So if we start looking at data, I think the answer gets a little easier. So this is what my preliminary answer is. We'll actually look at the next case. But before I actually forget, I'm actually going to send you a new case on Finland and Nokia. It's actually a case on the location. So I thought we should do this case. I would send this case across to you in the next 1 or 2 days on Finland and Nokia. So we will actually discuss that case in the next session because that will actually help us build the idea of competitiveness, build the idea of location a little further, and build the idea of regulation. So that is what we'll do in the next session. But then I'll just move to Suresh here. Suresh has a point here. Yes, Suresh.
I just wanted to know what the report about the locations in India is that segregated industry sector wise, or is it more on the generic aspects of
Okay, now that's a very
Is it general
what we have done is like
Because,
the result that we are
I mean-
declaring are generic in nature, but then we felt that okay, now this has a huge application for various sectors, and this is where we actually talk about okay, now I must actually be very, very candid. It's about consulting. It's about making money here. It's about advice fee. If somebody is really looking at getting into a very what do you call industry specific answers, we have those answers with us. We have the data with us. In fact, very something which we actually brag about. We have 460 different indicators on each city. We have data to that extent for each city. So we have data which is absolutely huge in terms of like how many people actually have access to toilets, to what is the percentage of people who actually go to loos in the open, to what is the power outages in a locality. So the depth of data that we have for a city is absolutely huge. But then we have those industry specific answers, but then that is what we are really looking at as a consulting thing rather than just declaring it in the open. Sure. So anything else, Suresh? Okay.
That's it. Thank you.
Great. Thank you. Okay. Yes, Amit.
Sure, sir. I'm from here. Actually, I have a question related to location, because we are talking all about location and what's the competition going on. My question is very specific, like, is only location a major factor in starting up a new business or changing or migrating from one place to the other? Now, I want to quote a small example here. If we talk about Bangalore, we talk about Hyderabad, Chennai, Chandigarh, or Delhi, or any place for setting up an IT firm or that sort of company. We never talked about a place like Gujarat. I have been there for since last 20 years. The cost of labor is pretty cheap. If you compare with other states, other part of country, it's pretty cheap, and you can best get competitive talent. I'll give a small example of a company named Colabra NC. They actually started off their Baroda operations close to 2000, and at that time the revenue of company was somewhere around 40 or 45 million dollars. Now it's like more than $350 million company, and the Baroda location is giving them a hell lot of revenue. So my question is, only location a major factor that plays role in getting you a good revenue? Because if we talk about a place like Gujarat, the Guju people likes to stay or either in Gujarat or in New York or New Jersey. So once we talk about a place like Bangalore, you find employees who are frequently changing over jobs, and it's not easy to retain employees. So I want to know which can all the other major factors, which a company or enterprise should think over before starting a new operation, or there can be many factors.
No, so that's what I said, Amit. When I say location has to be looked in a complete thing. That is why we talked about 4 pillars. So that is what 4 pillars will cover most of the points that you're really saying. And in terms of say Gujarat or whatever, in fact, do look at the study that we've done. In fact, I'll pass on some of the results to you from the previous year's studies. Just look at those things as well, and it'll give you some clarity in terms of like how we've ranked Gujarat. In fact, we've ranked Gujarat amongst the most exciting places to do business in the country. And in fact, the only state which has 3 cities in the top 35 cities in the country today is Gujarat. So that is what it is. Okay. In fact, there are a couple of things yes, Amit. We will talk offline. I have a couple of, because you're just next door, so I'll certainly talk to you. But before that, I'll just talk to the Siddharth from Gurgaon, and then I have a few points that I would like to say. Yes, Siddharth.
Yes, sir. Good evening, sir.
Hi, Siddharth.
So right now I have a query based on something like a fact where the company, there are 2 or 3 private players which are entering in a market and are taking raw materials for the same product from a different locality or from a different supplier. But the raw material which is available from different suppliers may be at a different rate or different price depending on the taking the material from the different sources or from different mines or different locality. At that point of time, if a person, suppose who is the 3 manufacturers who are trying to procure it from the one of them raw material owners, they are at a different price. The cheaper one, everybody wants to have it from a cheaper source or something like with a better quality. But the capacity constraints always exist. At that time, how can a person intervene in a market, or if it is not, if it is a totally deregulated market, will the government, how a person, how a manufacturer tries to capture it in the best possible way so that he gets the best material in the least cost? Because it is not either a government controlled or something like it, in which a private player is, or both of them are not in a something in a relationship or in a binding contract where we have to send it up or something like that. Suppose similarly a Tata Motors tries to procure weather strip from glass from a sand goban, while Maruti takes it from this Asahi glass. Both are taking the glass is coming from raw material from different source. They are both are manufacturing in a different from a the same material has been procured from the different source, leading to a different cost constraint, or leading with the same value performance. And how Maruti can take the sand goban as a vendor to reduce its cost, because they have already tied up with the Tata Motors and they have a capacity constraint. But while we know that they are having providing the best quality, the same quality with the least price, and the market they don't have that much flexibility in the system.
Can I ask you a question, Siddharth?
Losing the market.
Siddharth, can I ask you a question?
I'm asking for sometimes the material is the
No,
same material.
I know. I have a question from you now. From your question, would Maruti pay me $500,000 for an answer? So the answer is there.
If it comes out in a big way, what $500,000 it will be.
So $500,000 and I'll give you the answer. So like that's how it is. Very, very important question. But then I think what you're talking about is demand supply constraints and so on, and capacity constraints. And at times companies have very limited ability to really maneuver the strategy for other firms and so on and so forth. So I think I really need to look more deeper into what you're really saying. So let's talk about it once we meet and things. Sure, Siddharth. So very important. I think keep this question with you. So this is a very important question. I would really want to give an answer to this after talking to you. Let's talk over the phone sometime tomorrow, day after, or whatever, and let's see what we can do on this. But then again, a couple of announcements here. In fact, like I've been feeling a huge level of constraint in terms of not being able to finish 2 cases that I want to do in the sessions. So what we're going to do from the next week onwards is that we're going to extend our class time by at least half an hour. So we would typically be finishing, or we'll be doing a 3.5-hour session beginning next week, because I want these cases to get finished. And if we are able to do it earlier, great. If you're not able to do it, then we have the ability to extend it. And from next week, in fact, I'm talking to the office. If possible, we'll try to change the time for the session as well. I hope you're going to be okay if we prepone the session by about an hour. So I'm trying to talk to NIIT. If possible, we would actually do a few sessions from 5 o'clock till 8:30. Because if we have a longer session, I think we might just start a little early. And it's going to be a little shade better for all of us. And one more thing, in fact, a couple of, I think Rajiv had to, yes, Rajiv, do you have anything else to say?
Yeah, no, I think you actually picked it up. We have been discussing in our group if we can extend, or actually we've been discussing in a group to prepone the class time by an hour, sometimes to have dinner with family. But I think the more important issue is that we are keen to go through all these cases in depth, because that is how the learnings would come in, and therefore we are thinking that a 3-hour with about a 20 minutes break is less. So you're right, half an hour to 1 hour more would be necessary.
Yeah, in fact, I must admit, like I'm really enjoying doing the cases with the group, because I think we are able to do some good analysis and good discussion here. So I would personally not want to really hurry it up. So I think it's going to be better for us that we extend the session by about half an hour. Let us try it next week for an extended session for about 3.5 hours. And If in case we are not able to finish it in that time, then we'll extend it by another half an hour. So let's do that. And one very quick thing for all of you. We are going to have this thing that's going to happen on the 9th and 10th of October. So I would really suggest that all of you, if you're able to, all of you, I would want all of you to be there for the session. It's actually going to be something great. And we are going to do a simulation called MarkStrat. In fact, if you really want to read more about MarkStrat, you should actually look at markstrat.com, or it's a simulation by INSEAD. It's actually a real-time simulation wherein we'll actually run factories and units and so on and so forth. So I would suggest that all of you be there. It's going to be exciting 2 days and a lot of learnings, and all the things that we do in this course would actually get applied there. So I would suggest that all of you be there, and so that's how it is. So today we'll not do the next case, but beginning next week, let's do a session where, let's start at 5 o'clock. Let's try to start at 5 o'clock. I think NIIT will get back to you in the next 1 or 2 days. And if you are able to do, 2 cases in 3.5 hours, that will be great, or else we'll have some time to really extend it by some time. So this is what it is. In fact, we have a
point.
Hello. Yes, Rajiv, do you have to say something?
Yeah, we were just, as you mentioned that you have a case on Nokia in Finland, which is also on location. So do you want to send us that also, and then maybe we do both the cases on location, since it's an important...
Yeah, in fact, that's what I'm saying. So we are going to do the Indian floor mill case, of course, and we are going to do the Finland and Nokia case. We are going to do these 2 cases in one single day, and it is important that we do it in one single day. I really don't want to have a break in these sessions. So I want it to happen in one single day on location and everything. So that is what we like.
Next week is therefore these 2 cases?
Yes, exactly. Indian floor mill and Nokia and Finland. Sure, so that is what it is going to be. Okay, so great, Rajiv. In fact, we have Sandeep who wants to say something. Yes, Sandeep.
One question regarding the project. By when do we have to finish it? Do we have to finish it by 9th, 10th, or
I would prefer that to happen, because I think I would want each one of us to share our opinions and views at that time. Sure, so that is what I would want. I'll send you a mail on this actually, right? So I'll send you a quick email on this and take it forward from here. Thanks, Sandeep and Anupama. Okay, now there is this one important issue. In fact, should we have questions for all the cases and things? In fact, I have been thinking about it in terms of like whether should I actually give you assignment questions for cases or not. The challenge is, if I actually start giving you assignment questions for the case, then it actually makes your life much easier. And then what happens is it actually helps you lead the whole idea of the case analysis. And if you get into that thing, it becomes very easy. But my thing is from a pedagogical viewpoint, and it is that I would want you to actually find the problems on your own and the issues on your own in the case. If I actually give you the lead questions, then it becomes you can second guess it, or you can actually do it well. So my suggestion would be that let me not give you lead questions. I would want you to actually do it on your own. If I find that the case is a little difficult at points in time or whatever, then I might actually give you lead questions. But personally, I would not really want that I should give you a lot of lead questions. Off and on, I'll give it to you, but then not for all the cases. I would want you to actually discover those issues and problems and things that we are really wanting to do in the case on your own. Sure, so this is what it is. Thanks a lot for your time. Be well, and see you next week on Sunday, and most likely it's going to be 5 o'clock on Sunday. Thank you. Bye-bye.